Stop looking at Nvidia. Seriously, take it off your main screen. If you were watching the tape this Friday, you saw something that shouldn't be happening. The godfather of AI, Nvidia, delivered a perfect earnings report. They beat revenue, they beat earnings, they raised guidance. And what did the market do? It sold it, down 3%. AMD, it was a bloodbath, down nearly 8%. The entire semiconductor sector was flashing red. The easy money trade looked dead. But if you knew where to look, if you were watching the volume instead of just the price, you saw a name that most American investors have completely ignored, rocketing up the leaderboard. Nebius. While the Mag 7 were bleeding out, this new infrastructure stock was exploding with massive volatility and search volume. It's trending #1 on financial search engines for a reason. The rotation has started. We are seeing the first real signs that Wall Street is moving capital from the shovel sellers, Nvidia, to the utility companies, infrastructure. Today, we are breaking down the infrastructure shakeup. I'm going to show you why Wall Street is suddenly obsessed with a stock that was literally suspended from the NASDAQ for 2 years, why it's being called the public CoreWeave, and why this might be the most asymmetric risk-reward trade in the entire AI market right now. Welcome back to the channel. Let's follow the money. To understand the opportunity, we first have to understand the crime scene from Friday. Catalyst #1, the Nvidia failure. On Wednesday, Jensen Huang gave us everything we asked for. Demand for Blackwell chips is insane. Margins are healthy. But on Friday, the stock closed down. This is a classic sell the news event. When a company is priced for perfection, great isn't enough. The market is telling us that the upside for Nvidia at a $3.5 trillion valuation is capped in the short term. The air is too thin up there. Catalyst #2, the AMD collapse. Then you have AMD crashing 8%. This confirms the fear. The chip trade is crowded. Investors are terrified of margin compression. Everyone is looking for the exit door on hardware stocks. Catalyst #3, the rise of Nebius, NBIS. So where is that money going? It's flowing into Nebius Group. Now, you might be asking, who the hell is Nebius? Here is the alpha that 90% of retail investors missed. Nebius is the phoenix rising from the ashes of YNDN, the Google of Russia. When the geopolitical situation exploded, their stock was frozen, dead. But they just pulled off a miracle. They successfully severed all ties with Russia, rebranded as a Dutch company, and just resumed trading on the NASDAQ. But they didn't come back as a search engine. They came back as a pure-play AI cloud infrastructure company. Think of them as a publicly traded CoreWeave. You know CoreWeave, the private company Nvidia loves? The one valued at $23 billion just for renting out GPUs? Nebius is doing the exact same thing. They are building massive GPU clusters using thousands of Nvidia H100s and H200s and renting that compute power to AI developers who are starving for capacity. Friday's volatility wasn't just noise. It was the market realizing that Nebius is the only liquid way to bet on the GPU cloud theme without needing millions of dollars to buy into a private equity round. This brings us to the ripple effect. Why does this matter for your portfolio on Monday? Because we are witnessing a CapEx pivot. For the last 2 years, the trade was buy the guy making the chips. Now the trade is buy the guy who owns the chips and sells the power. When AMD drops 8%, it signals that the market thinks chip supply is eventually going to catch up to demand. Prices for chips will stabilize. But the demand for running those chips, the data centers, the power, the cooling, is nowhere near satisfied. The Nebius threat to big tech. Now this is where it gets interesting. Nebius isn't just a small cap runner. They're a direct threat to the hyperscalers like AWS and Google Cloud. Why? Because AWS is built for general web hosting.
It's like a minivan, great for everything. Nebius is built only for AI. It's a Ferrari. Their data centers in Finland and the US are optimized specifically for GPU density. If Nebius can execute, they steal the highest margin customers from Amazon and Microsoft. That is why the smart money is rotating. They are selling the bloated tech giants to buy the specialized infrastructure players. Let's get into the math, because this is the only reason I am interested in this stock. Nvidia's problem. Nvidia trades at roughly 35 to 40x forward earnings. To justify its price, it needs to grow at massive rates forever. The law of large numbers is working against them. Nebius's cash floor argument. This is the wildest part of the story. When Nebius sold off its Russian assets, they didn't walk away empty-handed. According to their recent disclosures, they are sitting on a massive pile of cash, roughly $2 billion to $2.5 billion in liquidity. Depending on where the stock trades today, the company's market cap is hovering around $4 to $5 billion. Do the math. Half of the stock price is backed by literal cash in the bank. You are effectively buying a pre-revenue AI cloud business for roughly $2 billion. Now compare that to CoreWeave. CoreWeave, which has a very similar business model, recently raised money at a $23 billion valuation. If Nebius is even 10% as successful as CoreWeave, the stock is mispriced. If they are half as successful, it's a multi-bagger. The market is currently discounting them because of the Russian ghost and the fear of the unknown. That discount is your opportunity.
The risk. However, this is not a safe trade. Nebius is a fortress. Nebius is a speedboat in a hurricane. They are burning cash to build these data centers. They need to prove they can fill those servers with paying customers. If they fail to execute, the stock goes to cash value, which is lower than where it is now. This is a high beta, high volatility play. So here is the game plan for the week ahead. Number 1, respect the rotation. The red tape on Friday for Nvidia and AMD was a warning shot. The market is looking for catch-up trades, not front-runner trades. I am not selling my long-term Nvidia hold, but I am absolutely not buying the dip yet. Let the dust settle. Number 2, the Nebius play. I am treating Nebius as my number 1 speculative idea for the rest of Q4. The specific levels I am watching, I want to see the stock hold the $18 to $19 level. If it holds that support, the risk-reward is fantastic given the cash on the balance sheet. I'm looking for a breakout above the recent highs to confirm the momentum is real. Actionable advice: don't go all in. This is a volatile name. But if you want exposure to the next phase of AI, the infrastructure phase, you need to look outside the Magnificent Seven. The search volume is telling you where the eyes are. The price action is telling you where the money is. Nebius is the stock to watch this week. If you want to see my exact entry and exit targets for this trade, I'll post them in the community tab. Smash the like button if you want more deep dives on these hidden AI stocks. I'll see you on the open.